to this exclusive conversation on the expectations from the budget 2022. The budget of hope, as we call it, is powered by Investonomics, an initiative by ICICIdirect. Joining me now is Mr. G. Chandrashekhar, member SEBI Commodity Derivatives Advisory Committee. Welcome, Mr. Chandrashekhar. Sir, if we start with what are you expecting from the budget 2022 this time?
Oh, yes, that's a good question and a very general question, of course. It's like this. For a developing nation like India, I've always believed the budget must aim for 4 outcomes. Okay. The first outcome is that the budget must accelerate economic growth. And that economic growth must deliver its benefits equitably amongst the population. Okay. So economic growth with equity. Second outcome should be to attract investment, both domestic investment and overseas investment. The third outcome I would like to see is creation of jobs. And for our country at this point of time, job creation is so critical, so important. And the fourth outcome should be that the budget should have proposals that will rein in or control inflation. And as we know, inflation is such a serious issue around the world and certainly in our country also. And therefore, there should be nothing that will fan inflation. On the other hand, if there are provisions, we should be able to control inflation. If these 4 outcomes have to visit the budget proposals, is what my view is. This is number 1. The number 2, what I want to mention, and all of us know that we are just kind of getting out of the adverse consequences of the pandemic. 2020 and substantial part of 21 also. We are just about getting out of it, and therefore, accelerating economic growth becomes important. Attracting investment becomes important. Creation of jobs becomes important, and of course, inflation control becomes important. Now, in the Union Budget 2022-23, I would like to see a few provisions. For example, I would like to see exemption limit for personal income tax raised substantially. And why am I saying 60% of India's GDP is contributed for by consumption, and therefore we need to kickstart consumption cycle in our country, and that is possible only if the government puts more money in the pockets of people, which is possible by reducing the tax exemption rate, probably so say 10 lakhs. If you raise the income tax exemption limit to 10 lakhs, a lot of administrative work will come down, will decrease. That itself will save a lot of cost, and the revenue sacrifice is not going to be not going to be big. I also would like to see more allocation for welfare programs this year, primarily again as a consequence of the pandemic, loss of jobs. The MSME sector is facing serious difficulties, etc. And therefore, more and more allocation for welfare programs, particularly to support the vulnerable sections of the population. These will be some of those big ticket expectations that I have. If I have to speak specifically on agriculture, and I'm sure you're going to ask me, and therefore let me jump the gun and mention, in case of agriculture, I would certainly like to see higher allocation for various schemes of the Government of India with particular emphasis on R&D. Because our R&D budget in the budget for agriculture is rather low considering the size of the country and the size of our agriculture output. Okay? And therefore, while agriculture may be a state subject under the constitution, the center also has a great amount of responsibility to promote agriculture in tandem with the state governments, and therefore I would like to see a much higher allocation for agriculture development programs, including, of course, for R&D. But what is also important for me is, as an economist, as a journalist, as a researcher, it is not enough to just make outlays. I would also like to see outcome reports. What did you promise? I would like to ask the FM, what did you promise in the last budget? Have you delivered? In this budget, I want to get an outcome report, which is my expectation very clear. Mm-hmm. And then if we continuing to talk about agriculture, I want to say that last year the FM mentioned that the government would spend 1 lakh crore rupees over a 4-year period, 25,000 crores per year on agriculture infrastructure development. How much money has been spent on agriculture infrastructure development last year, and what is the outcome? I would want to know. So these are those big ticket issues and my expectations from the budget. And there are very specific things which we can probably discuss a little later. Yeah.
Every one of us has been expecting more spending from the government side, but for now it is okay because tax buoyancy is there. We are seeing it from last 2 years happening that corporate tax collections have been higher, indirect tax collections have been higher. But does the government really have the bandwidth to increase the spending when we are talking about a fiscal deficit of 6.8% for the current financial year? So where is the bandwidth for that?
Absolutely. I have no doubt whatsoever that the government is in a very tight fiscal position. And that is why, for example, there is no way the government will be able to reduce duties and taxes. They have given a very large, I would say largest to the corporate sector by reducing taxes last year. Okay, which is fine. But on imports, for example, I don't see an opportunity for any tax sacrifice, because on revenue considerations, for example, there's a demand from a section of the gold trade that gold import duty should be reduced. In fact, I just wrote a piece yesterday on why it's going to be rather difficult for the government of India to reduce customs duty on gold any further. Last year itself, there was a 2.5% reduction in duty. I don't think there'll be more reduction in duty. Of course, it is for the trade and industry to keep demanding reduction in duty. And therefore, because the fiscal space does not permit. So I agree. But at the same time, what is important is whatever monies we are spending on various programs, those monies have to be spent effectively. And that is why an outcome report becomes very important. Therefore, effective deployment of funds and the outlays is very critical. And I would actually make the government answerable. They have to answer how they have spent the money and what is the outcome. And I think there can be no dispute about this, because as citizens, we have a right to ask and demand explanation. Yeah.
When you talk about inflation, sir, do you mean that government needs to act on the excise duty cuts for petrol and diesel to bring some relief to the citizens of the country? And again, does the government really have bandwidth for that?
Exactly. That is why I suspect now those who use petrol and diesel have probably got used to these rates. You wouldn't have got used to petrol rates of 100 rupees plus 110 or whatever that rate is. Whether we like it or not, we still continue to use our vehicles. The same probably goes for many people, most people in our country. But the government needs revenue. How will they find money for all the welfare programs? Therefore, it's a thankless job which the policymakers have on hand. It's like walking on the razor's edge. You can actually fall either side. If you reduce taxes, then your welfare programs may suffer. If you don't reduce taxes, then inflation levels will continue to remain elevated. Therefore, it's a very tough call. And that is why it is important for the government to decide where is the scope for reduction in taxes and where is the scope for raising taxes. And therefore, we have the concept of merit goods and demerit goods.
Right.
For example, accepted position is gold is a demerit commodity, and tobacco is a demerit commodity, and therefore these are favorite commodities for any finance minister, any policymaker to start taxing or raising the taxes without hesitation. Yeah, and therefore I agree. Yes, I would actually think there is a case for reduction of taxes on petrol and related products, but the fiscal space may not permit. But let me go one step further. I'm expecting personally a small correction in the global crude oil prices, notwithstanding the fact that they are testing now $90 a barrel Brent price. I'm sure by March, I'm expecting the prices to correct to $80. It's a consolation. It's not a big relief, but yet 80 is better than $90, and then therefore, to that extent, there could be a small, yeah.
Since we're talking about the government budget, let me throw a question on disinvestment. Government has performance in FY22 has been really terrible on the disinvestment front. So what is expected? Do you expect the government to now focus more on privatization than over the disinvestment, which has been a failure till now?
Again, this is this disinvestment program has not really taken. Let's be honest. The targets were quite ambitious, and we have fallen far short of all these programs. But even in case of privatization program, will the policymakers, will the government be able to get the best value? That value, capturing the right value, is extremely important. This is number one. Number two, there's a monetization plan of how much? 6 lakh crore rupees, if I remember correctly. Yes, it's a great plan, but there has to be a lot more clarity about the rights and duties of those who are going to invest in this, and then therefore there is at the moment not much clarity about how this monetization program is going to kick in, and what will be the rights, duties, and obligations of those who are going to make use of this monetization program and start investing. And will there be a regulator? Will there be a regulatory oversight? I mean, these are questions which are actually haunting a lot of investors. And therefore, unless there is policy clarity and policy predictability from a long-term perspective, I think, again, even this monetization program will be rather slow. Yeah.
Coming on to the commodity derivatives market, we are missing the depth in this market actually, and the volumes have really fallen from 80,000 crores to some 20 to 30,000 crores, and there has been a long-standing demand from commodity markets that CTT be rationalized and cut a bit. So, do you expect this happening this time?
Personally speaking, this is my personal view, nothing to do with any of the positions that I hold in so many places. Two things. One, I have always supported CTT, primarily because even 10 years ago or 8 years ago when it was introduced, the trade was very upset with me. But this derivatives trade needs an audit trail. Therefore, CTT provides a good audit trail. This is number one. Number two, in this budget, I don't think the government of India, the FM, I don't think the FM is going to do anything to CTT. CTT will continue, is my view, personally. But I've always argued that the revenue that comes out of CTT should actually be deployed for strengthening the physical market or the cash market. It currently goes to the Consolidated Fund of India. No, I think it should be specifically earmarked to reform the cash market or the physical market. Why am I saying this? I'm saying this because in the commodity market, whether it's agriculture or non-agriculture commodities, our physical markets, our cash markets, our ready markets they deserve a lot of reforms. And without reforming this physical market, 20 years ago, our policymakers in their wisdom erected a wonderful superstructure called the derivatives market. Therefore, the base for the derivatives market, which is a cash market or the physical market, is still weak, is still not reformed, and therefore we need to reform the physical market. And the CTT amount, I would strongly urge, should be directed towards reforming the cash market or the physical market.
Mm-hmm. So the committee has favored allowing eligible foreign investors to invest in commodity derivative segment. Do you see this happening anytime soon? But on the other hand, if we talk about the domestic market, domestic players, despite SEBI allowing mutual funds to trade in commodity exchanges, few years back, no specific standalone wealth product has been developed by them.
Right.
How do you see this happening there?
I agree. I think this actually devolves on the exchanges to develop products. This is number one. Number two, the market also, the exchanges, in fact, and the broking community will have to gain the confidence of the mutual funds. I think the mutual funds are rather wary of starting to invest in commodities. They've started in a small way, but then we know the kind of funds that mutual funds have, massive funds. They should be able to invest, but it's a matter of trust and confidence. For what are the exchanges doing to gain the trust and confidence of the mutual fund? What is the brokerage community doing to gain the confidence of the mutual fund? And what are the brokerage companies doing to market the products that are available at the moment with the exchanges, like index trading or options, etc. And therefore, it's a question of engaging with the mutual funds industry, convincing the mutual fund industry about the benefits of this market. But there is a thorn in the flesh. What is a thorn in the flesh? The government of India merely merely suspends contracts, derivatives contracts. And then therefore, when there is no certainty of the continuity of this contract, chana, for example, and many of the other agriculture commodities, for example, when there is very limited certainty about the continuity of this contract, there is much less predictability. Obviously, I think the mutual funds will be quite wary of investing, but I'm sure they're not going to go away. They will need to diversify, and they'll come back into this market. And I'm sure several ETF products are being explored. Therefore, it's a slow process, but I would think the regulator, the exchanges, the brokerage community all have to get together to woo the mutual funds, because they certainly have very large sums of money for investment. Yeah.
But if that is the case, then how can you expect the foreign investors to come and participate?
I agree, completely agree with you. You actually touched the raw nerve. We're all talking about promoting the market, developing the market, etc. But when there is policy uncertainty, what will you do? Why should any investor come? And therefore it devolves on all of us. When I say all of us, all the stakeholders in this ecosystem. I'm not a trader. I don't trade. I don't invest. But I still think I'm one of the stakeholders in the system, because I've been tracking this, commenting on this. I've provided policy inputs for the government and for the regulator. And therefore, I see myself as a stakeholder. So that it devolves on all the stakeholders to actually convince the government of India not to suspend or ban derivatives contract in a knee-jerk fashion. Have a healthy debate, have a talk, and justify the actions. And therefore, if it's just done overnight without even offering an explanation, I think that does not send a good signal at all about this market. And that is why we need to, as I keep saying, we need to gain the trust and confidence of the investors. And that can come only with a certainty and with predictability.
Are you expecting the recent ban on some of the agri-commodities being lifted anytime soon?
Let me be very honest. I would say yes.
Okay.
And why am I saying this? My sense, my very personal sense, having been associated with all this, and we know how policies are made. This, in my view, very strong view, is a temporary decision to tide over a certain situation. Even let me go one step further. Elections are coming. There are elections to 5 states. The government can't afford to take any risk about price rise. Already inflation is at an elevated level. But there is a mistaken belief that the derivatives market actually exaggerates the price impact, which is not really so. But that's another matter. The policymakers possibly want to show to the world that they're taking action, but that's another matter. But I am convinced I'm convinced that come April, there will be a review of the ban on these derivatives contract, and this restrictions will be lifted. I very strongly feel so. I have no information relating to this, but this is my expectation, and this is what should logically happen.
So what is the status on the gold exchange? I mean, how are things moving on?
Oh yes, I think it is still work in progress. I think at the moment there are guidelines relating to vaulting which have been announced, and during the course of the year, I think the gold exchange should become operational. So there's a lot of background work that needs to be done, and once a gold exchange becomes operational, I think it'll certainly boost the trade. It'll bring a lot more transparency. And in fact, I wrote, was it 2020, November 2020, I remember, I wrote a lengthy article on how to make India a gold price setter and why we are today not the gold price setter, despite being a very large importer. I gave a number of suggestions, I gave a number of reasons, I've made recommendations. I'm sure all that is under consideration. Gold exchange should be the first step towards making India a price setter. But in addition, we need policy predictability, we need transparency in the physical market, etc. All those recommendations have been made. But it's work in progress, and I expect during the course of the year, gold exchange should become operational.
One of the points that you made in your initial statement was that you want India to be a attract foreign investors into the country. So what is really needed for that? I mean, on the FDI front, many of the sectors are now open for investment, but the kind of investment that we really want to garner is not coming in. So what exactly do we need to do?
Shall I be brutally frank?
Yes.
Yes. It is important for India to gain the trust of the investors that their monies in this country are safe. Okay, number one. Number two, their monies in this country will be safe if they have confidence about the social conditions in India, about the political conditions in India, about the judicial system in India, about the long-term growth prospects of India. Long-term growth prospect, there is no doubt at all. There can be no two opinions at all. But there are beyond this growth prospect, they will also be looking at several other socio-political factors when they start to investing, when they start to invest in our country. And that is why it is important for us to send out very clear and loud messages that India is an absolutely stable country. It's a great democracy. Your monies are safe here, and that our social fabric is as good as it has always been, etc. I think that messaging is important, and I suspect we are not doing enough in that messaging part.
But sir, FIs are very active in the equity markets in India, yeah?
That's okay, but that's hot money, isn't it? I call that tourist money. That money comes here, enjoys the benefit, and goes back. We should actually be attracting FDI, foreign direct investment into our assets, material assets, solid assets. FII funds are basically they'll come, they will make money in India and then they'll go back. They have no affinity. We need investors with long-term commitment to the Indian economy and to the people of India. And that can come only through FDI. And that calls for a very strong, what should I say, very transparent policies and confidence among the investors that their monies here are safe and that ease of doing business in India is far better than in competing markets. Though that's the kind of messaging that must go.
$5 trillion economy by 2025, and for that to really happen, exports will play a very crucial role. So what is your view on how exports should be really boosted from our country?
Oh yes, of course. Exports certainly most of the particularly Asian countries which have grown rapidly. They grew in the 80s and 90s. Are all substantially through exports. So we should also obviously promote our exports. But remember, we have 1.4 billion people in our country, and therefore we are a large consuming market, and our own per capita consumption of various goods and services is low. And therefore, while we should certainly try and maximize our export, we should also to start with explore the domestic market. And therefore, when you start exploring the domestic market where there is a strong case for boosting our own consumption of goods and services, in fact, our reliance on exports will and can potentially decrease. But as over a period of time, when our consumption levels reach a particular level of satisfaction for the consumers, then we can start exploring export opportunities. Second, for export, we should also be producing genuine export surplus. Take agriculture commodities. Do we really produce genuine export surplus? I don't think we do. We may claim ourselves to be very highly self-sufficient, self-reliant in food grains, etc. But that comes at a cost. Sugar, for example, it comes at a cost. Rice export, for example, comes at a cost. Sugar and rice are highly water-intensive crops. By exporting sugar and rice, we are actually exporting water, and there's a looming water shortage in our country. So I think we need to prioritize. We need to prioritize. We need to look at the social angle, the environmental angle. Yes, export can be boosted, should be boosted, but we must be able to produce genuine export surplus. For example, take textiles. Our potential to increase our textile export is very high. We are not exploring enough in that direction, and there is a great opportunity here for us to do product diversification, even within the textile sector. But we need to invest therefore in R&D. Well, I think it's all possible, but people, all the stakeholders have to come together. Government should work in tandem. We need a policy environment that is conducive for export, and there has to be certainty about government policies. I think finally that's what really matters. I want to talk two or three things. One, I want to discuss the edible oil sector. We spend easily $12 billion and import 13-14 million tons. And the government is talking about Atmanirbhar. I would like to see in this budget a provision where the FM directs and mandates large corporates in the edible oil sector, like large oil mills, large solvent extraction plants, large refineries, to engage in backward integration. Why should they not help? Why should they not work with farmer producer companies and produce their own oil seeds that they need? In fact, that will reduce our dependence on edible oil import. All of us all the time talk about edible oil import. The real Atmanirbhar will be when we produce more oil seeds in our country, help the farmer realize a better price, and increase our domestic production of oil seeds. I think that's extremely important, which is where the corporate farming, not corporate farming, contract farming by very large operators in the edible oil space becomes extremely important. And similarly, even in case of pulses, I think we need a steady long-term policy. We have to continue to remain in the global value chain, but we also need to boost our domestic production. I suspect our acreage under pulses is now getting saturated, and our production is getting is now range bound 21-22 million tons, but demand is going to go up. So we need to look at both pulses and oil seeds very specifically to boost primarily through encouraging corporates to undertake backward integration and work with farmer producer companies. I think that I thought was a very important message. Yeah.
Thank you, Mr. Chandrashekhar, for your time and for presenting your views on what to expect from the budget 2022.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.